Hello everyone, Gudre here, and this is my money brief. Looks like it's everyday new circular. So yesterday I did explain one of the circulars that the central bank did release, and this time around they released another circular yesterday evening. So two circulars in one day. Interesting. And if you recall, I did mention that these things are all geared towards trying to increase money supply, or dollar liquidity actually. So this time around, this is geared towards the IMTOs, international money transfer operators. Sometime last year, I think the central bank issued a circular and telling them that they can transfer money, flow money into the country, but with a band of plus or minus 2.5%. Essentially saying that they can't buy or sell above or below 2.5% as the band. But that has created its own problems because Nigerians who wanted to transfer money into the country through these IMTOs will not do that at 2.2, plus or minus 2.5%. So think about it. Imagine the exchange rate in the official market is at 850. So you're telling me to sell it at 850 plus 2.5%, even though the black market it's maybe going at 1,000 Naira or 1,200 Naira. So nobody's going to do that. So what is then happening is that a lot of the IMTOs now have to do this off the book. And instead of bringing the dollars in, or instead of having your loved one go and actually cash dollars, they cash Naira because the transaction is just done off the books. And then some don't even bother using their IMTOs. They just do their transfer straight here at the black market price, because that's what everyone is going to defer to, the black market price. So the CBN is essentially saying, you know what, we're going to take away that lead or that cap. So now people can bring in money at whatever rate that you think is good enough to flow money into the country. Interesting, because it appears that the central bank has now deferred completely to the black market rate. That's what it looks like, and no surprises here. The official rate is even weaker than the black market rate. So interesting guidelines or interesting policy changes that we've seen. But why are they doing this? Like I mentioned, the impression is that they think there's a lot of dollars out there that would have been in here creating liquidity. And I think from their own data, they think it's because of this cap, which they imposed themselves last year. So they're saying, okay, let's take away that cap. So that way, if you want to send FX into Nigeria, you can send it at whatever rate you want, and then it just comes in. So that creates liquidity in the markets. So is it good or bad? Well, I mean, I think it's good. Anything to address our liquidity challenges. Remember what I said yesterday in my previous message. I had said that you can, there are two issues: there's supply and there's demand. So they're trying to fix the supply side now, which and supply itself is external and internal. So the internal side is making sure that all the dollars that actually want to come to Nigeria, particularly diaspora remittances, come in unhindered without any restriction. The next and the elephant in the room is foreign portfolio investors, FPI or FDIs. We do mostly get FPI, so that is a lot more structural, and I guess that's going to probably come next when the CBN meets for the Monetary Policy Committee meeting next month, or this month, rather, February. I'm expecting that they will have to increase interest rates, especially on fixed income securities, bonds, treasury bills, OMO bills, particularly OMO bills and treasury bills, OMO bills especially, maybe not even bonds, because once they increase those yields, then maybe that might incentivize foreign investors to bring in money into the country. So that essentially is what this new guideline is. If you have further questions, or maybe even have better insights than I do, please drop it in the comment section. There are a lot of people who know a lot more about these things than I do, so no knowledge shared is lost. So please drop a comment and maybe share what you know, and then we're going to all learn from it. Please see you guys later.